Monday, July 10th, market analysis. Stan Ehrlich, good morning. We have the stock market indexes, a mixed bag. Well, actually at the moment, yeah, still. And I start out with the S&P 500, the spider, every morning, and I'll do it the same thing. But we've got some brand new signals in interest rates and futures to go over in a few minutes. Now, the daily data on the S&P 500. Well, we got down a little bit below Friday's lows. Not particularly important after opening a very small amount lower. And now we are barely higher on the day, 16 ticks. And any rally that's happened in the interim since this morning's opening, and we're now almost 10 o'clock California time, about the middle of the day. And as you can see on the 1-minute chart, the spider has opened, came back up, dipped a little, made the high of the day, slipped off, made slight new lows, and has bounced a little at the moment. So for this morning so far, we've got mostly lower lows and lower highs, or a little bit of a downtrend, not very aggressive, but slipping. So on the DIA, the Dow Jones Industrial Average daily data chart, and I gotta reset the scaling, sorry about that. We have still the highly unusual, very, very rare, I cannot remember seeing one of these before, a 3-day island top still intact. Any rally since last week or the end of last week has not closed the up and down gap area on what was, I believe, Tuesday, Wednesday, Thursday. It was Wednesday, Thursday, Friday. Yeah, Tuesday, Wednesday, Thursday, and gap down on Monday, Tuesday, Wednesday, last week. Was isolated by gapping up and then gapping down on Thursday, and Friday it just slid more. So we made actually a new low today by a couple of ticks. And at the moment, the DIA is up $1.41. The strongest of the three indexes, the NASDAQ, is actually down 66 cents at the moment and made a new low since the market topped out last week, creating a double top so far. Now, remember, the double top is not broken out, whether you're talking about basis the DIA, which also has it, and the SPY spider also has the double top, none of which are broken out to the downside. And that means you've got to break the lows in the middle of June or toward the end of June on a closing basis to break out. When that happens, I think I'll be on my way to closing gaps that occurred either late May or the 1st and 2nd of June on most of the three indexes. At which point, if we can get down to 335, 333 or something like that on the QQQs, which is the furthest away relative to the DIA, it's down gap, and that would be around 333. Interesting that the Q's gap is going to be closed at also a 333 number. Isn't that weird? And the SPY is going to close its gap that I'm talking about around the beginning of the month at 423-ish. 423. So all of these gaps are a rather significant amount lower than we are at the moment. But again, if the double top starts to break out to the downside below the lows in June, it should have enough downside momentum to close those gaps. And then what's going to happen? It's going to turn around and go right back up again for a very strong rally into new high ground for a year and a half. I'm very bullish intermediate to long term on the stock market indexes. It's whether these little double top formations are going to work or not as to whether my gap is going to get closed at the beginning of June and then back up. So one way or the other, I'm bullish. So take that into consideration. Now, the Russell 2000, a little bit different story. No island top, no, well, it does have the double top in an area of resistance. And we actually got a bearish engulfing ER sell signal on the first high that worked great for well over a week and made some very good money. Second time up, topped out in resistance late last week, came down and darn near broke out of the double top by closing below the low between the two highs, but it didn't. And here we have it coming right back up into that resistance area almost. So I think it's going to stop again in this red zone. I used to have it at green, but I changed it to red because it's resistance. When at support, I like to keep them green whenever we get close, but this is red. I should change this big one down here to green, but that's okay. So we're nowhere near it, and I do not expect it to even get reached. Boom. As a matter of fact, I'm going to delete it. A little bit distracting. So now we're between a rock and a hard spot. And if we break out of the double top, we're going to get some gaps closed probably, and then up. If we don't break out of the double top, we got sideways and then a bullish breakout probably. And that's okay by me. I'll scream bloody murder when either one of them happens. Right now, we're again a little bit between a rock and a hard spot. Futures markets. Okay. Oh, by the way, one thing more before I go anywhere. Yeah, I'll go to futures right away because then I'm going to go to the bond chart. Something extremely interesting I haven't seen for many, many years. But we start with the S&P 500 E-mini, which is the same as the spider. Resistance, double top formation, overbought conditions in general. Need to watch to see which way it breaks out of this trading range we're in. Next chart is bonds. I have a cycle that I'm very, very enamored with and we'll be talking about probably for weeks to come. I started the middle of last week pointing out that the cycle low date could have been July 7th, Friday of last week. I shifted the whole cycle to the right one day on a chart I'll show you in a moment, and it still works either as good or better than the one I'm showing you right now, which is hard to believe because look, this is an 88-day cycle. You don't see it on this chart. I'm only using the TradeStation vertical cycle lines, which are a little on the not very sophisticatedly well-developed level. But the last cycle low was supposed to be, and it did occur on March 2nd. The one before that was exactly on time, and that was October 24th. The cycle low 88 days earlier was a bullish green engulfing ER buy signal 1 day early, which is for all practical purposes exactly on time. The cycle low before that was apparently a couple of days late and very close to being exactly on time, but not quite, and did work extremely well. The cycle low before that was a couple of days late, which is really very good timing and worked pretty darn well. The cycle low before that was the beginning of a hell of a good strong rally. And now finally, we're starting to see some timing that didn't work out quite as well. That was actually a little bit of a rally high. This one didn't produce very much profitability whatsoever. That one worked. But again, we're starting to kick in really good timing. This one worked great. And we're going back already to January of 2020. And the cycle has an outstanding history of working very well. Let's look at the Ehrlich cycle forecaster, what I developed over the years as a cyclical tool, which also points out the cycle highs if it's a symmetrical cycle, and you can shift them so they can be asymmetrical, tops and bottoms, change the bar of color, which we call the window of opportunity. All we have to do is have a low or a high in that window of opportunity, which is 10% of the time frame of the cycle, which is 88 days. You see the length right here in the upper left-hand corner. So half of that's 44. And if you're looking at 10% of 88, you're looking at 4.5 days approximately before the exact date and 4.5 days after, or a week before, week after. We are on the exact low potential date. I shifted it to the right 1 unit. And today is the day, and we, oh my God, have a tested support level in an oversold condition. And it is approaching the high of yesterday. If by the time the close occurs, we are higher, today's high is higher than yesterday's high, Friday's high, we will have a green bullish engulfing official buy signal on a cycle low that has been outstanding and in oversold condition and in support. Come on, you can't get much better combination of factors. I think today is a low in bonds. Frankly, whether we have a bullish engulfing signal officially or not, the last window of opportunity, the green little zone here of about 2 weeks, we bottomed out at inside it again and bottomed out. Just look at the bottoms inside it. We bottomed out. We bottomed out. We bottomed out. We bottomed out. And it failed. This one is not the best, but there's a little opportunity there. And this one, we bottomed out. And again, we bottomed out. And now I'm going back to 2020, 2019. We were slightly late by a couple of days. We bottomed out again in May of 2019. We were only a day or two early. This did make some money. It wasn't exactly on time. And if you happen to glance while I was doing this at the tops in red, the cycle highs, they have been on the average also outstanding in general. Now that one didn't work at all. But who's going to sell short when you're oversold? That's not good. Worked, great, and not good. Great, pretty good, great, excellent, and excellent. I can't remember a track record on a rhythm of any length, except for the October lows and maybe the Santa Claus rally coming up. And the October lows, frankly, are coming up again. Remember, October 13th, I talked about 1 to 2 months in advance last year. It was incredible. Okay, enough of this. Sorry. Bonds, I'm finished with. We're going back. As you might expect in 10-year notes, you have the same historical rhythm, and we're due to rally, and we have a higher high today than Friday, but it's missing the lower low. So I don't have a bullish engulfing green buy signal exactly when it would have been forecasted, and we don't have it. That doesn't mean it's not going to rally. The cycle is still a cycle. That doesn't change. I just love seeing the green and reds at buy levels and sell levels with timing, anticipation, a cycle at the same time. So 10-year notes going to do the same thing bonds are going to do, and they're going to rally. Now, crude oil, a little more strength than I would have expected, but still no big deal. Longer term, still bearish. I think it's about to turn back down. We're not quite overbought, but you don't have to be. It's just a better combination of technicals. Next, natural gas. Neutral RSI. We got a sell signal a couple of days ago on Wednesday of last week. It worked very nicely Thursday and Friday. Plenty of profit potential during those 2 days for the ER1 new short. ER3 is the red dot. Today's the last day. We're going to get short at 2.710, and we haven't gotten there quite yet. Very close. But if it does touch our new short sale trigger price at 2.710, we're short on an ER3. We'll see what happens. Bearish, ER sell signal, so far so. Next, natural or heating oil. A little bit of a short-term bullish breakout. We've got a bear trend line to contend with. We're very close to being overbought, which if you move up a little more in the next day or two, will probably be overbought at a major bear trend line, and that's a perfect place to go short. Low risk if it doesn't work. If it does work, probably a darn good trade. Trend is down in your intermediate to long-term favor. Next chart. Gold, silver, platinum, and high grade in a moment. Gold. We've got a little rally for a day or two after being oversold in a bear trend. I don't think it's got much of a rally potential, and I'm looking for another new low. Next, silver. Same kind of commentary. The rally's already been high enough for me to expect it to top out. It did start to turn down, but let's see if we can make another minor new high before it turns down to make new lows completely. Bearish, looking for sell signals, reason to scream bloody murder. If you're not short, get short quick. Next, platinum. Oversold, same situation, new lows long-term in the last week or two. Was oversold. We have a little rally out of oversold conditions at this point, and maybe it'll extend up a little bit further. I could expect the possibility of 960 something in a couple of days this week, and then turning down, but I'm bearish, looking for new lows. Next, high-grade copper. Same commentary, bearish. Maybe we'll see a rally up to about 3.85. That seems to be a pretty good level at which it might stop and then turn down. It's also possible it could get up again to about 4. Next chart. Soybeans. Remember, about a week or so ago, I started talking about soybeans potentially forming a gigantic 1-year double top formation, which might be one of the biggest ones I've ever seen. But everything is here to call it a 1-year double top. Overbought conditions at previous highs. We made a new high. It couldn't hold. It closed lower than the old high, slipped for a couple of days. Today is the first day of bouncing upwards. We'll see how far this carries. It could kill the double top completely and turn into a heck of a bull market rally, which I will have to agree with and talk about if we get new highs on a closing basis. Plenty of upside room here. This swing should be pretty darn big if it turns out to be bullish. But so far, at very high prices historically, we have the possibility of this double top. I'll probably draw a resistance level in the next couple of days, a little bar across these two highs, and see if we can't start to make lows lower in the previous day, 2 days, 3 days, 4 days back, and start to trend south again. But this looks like the beginning of a huge double top formation. Next chart is soybean oil. Kind of did it already. The double top really isn't that accurate, but since November, when it's the second rally high to try to make a new high in a bull trend, it didn't. Came down, got a really good buy signal, lasted a couple of weeks, excellent. Then it dropped off, a couple of bad buy signals, 2 or 3, actually 4. Oh no, that one actually made some money for a couple of days. That one actually made some money for a day or so. That one didn't. It was probably a small loss, and I'm talking about March 20th this year. And this one, it was modestly okay. Nothing great here at all. Last 4 buy signals were so-so. You probably made a little bit of money if you followed the rules. Now, after coming down and getting oversold, we have had a whopping big rally, a lot more than I originally expected, but not really changing the long-term picture. So we just got oversold. We have a significant divergence, big overbought condition on RSI and a high in price. Price made new highs a couple of weeks later, but the indicator did not. That's divergence. And this rally this morning, coming close to maybe making a new high, but if it starts to fail and we get below Friday's lows, that's an indication that we're going to probably drop a chunk more. And this last high in overbought condition is going to stick. But at the moment, you can see why I'm a little skeptical, because we're kind of close to a new high close, which really isn't all that important all the time. Sometimes it really needs to be above that high last week. I'm looking for a downside move. I'm looking for this rally to fail and head lower. Next, meal, soybean meal. Same commentary, overbought, and actually meal several days ago was in the same condition. up here is soybean oil a moment ago. So that did fail. And we came down and closed lower on that day, and then lower, and then lower, and lower. And finally, we got a higher current quote. A minor rally after being down 4 days, 3 or 4 days. So bearish, looking for in the next week or two new lows for the trend, and not much rally in the interim. Next, corn. Well, it bottomed out at almost exactly, just a few ticks lower low, but did not close in new low ground. So oversold conditions, double bottom possible, a little bit of a bounce, a little on the feeble side, dropped off on Friday, and today coming back a little bit, but it's inside trading range or doji. Doesn't mean a heck of a lot usually in decision, generally speaking. Looking for lower levels. Next is wheat. And I got to say, for pretty much all the grains, there's not too much bullishness I can come up with. Just little bounces in a bear trend, just like soybean wheat here. We just missed a few days ago, the middle of last week, having our new short sale buy stop getting hit. It did not get hit. We missed by a very small amount. The yellow protective stop dropped off the next, well, a little bit that first day, which was July 5th, day after Wednesday last week, day after 4th of July. 6th, Thursday, dropped off a chunk. Friday, dropped off even more, and looks like the second lowest close since the turn, which was in June. Now, slightly lower at the moment, a little lower than yesterday's low, second lowest low since the top in June. I'm expecting new lows for the whole trend very, very soon, next day or two. Next, cattle and hogs. We have a sell signal in the first rally high on cattle on June 7th that worked great, and a little complementary sell signal a couple of days later, 4 days later, 5, that worked very nicely. Now on the way back up, we got overbought again, dropped a little bit last week. Now this morning, we come back up, rally up to almost exactly the same high that we had in early June. And well, actually the date was, what was the date on that? June 7th, correct. And now in July 10th today, we have a test of the previous high, a currently unchanged quote, and if it starts to sink more, double top. Today's the second high of the two highs, about a month apart, a little more than a month apart. Keep your eye on this very closely if you like to trade cattle, because it could turn out to be a bear move that will come down to, I'm thinking, at least about 160 or lower. Next, hogs, overbought, came down from Thursday's overbought to Friday, a little bit lower. And today we have a brand new short sale signal, ER red, today in progress. Now, you have to understand that we're just slightly lower on the day, but all the criteria have been met for the sell signal. One criteria is that it closed lower than yesterday's close, or Friday's close in this case, and it's just a little lower at the moment. So if it closes higher than Friday's close, it will not be a red sell signal. It will turn back to being either yellow or white, and you will not have an official ER sell signal. It needs to stay below the Friday close in order to stay red, in which case, well, Tierra del Fuego, I think, is going to head south. Next chart, OJ. I've been talking for a couple of days now about a possible head and shoulder top. And OJ is about the right point in time, the same amount of time from the first shoulder high to the head. Is just eyeballing this. I haven't measured the exact days. That's not particularly that important. You rarely see it being exactly the same number of days, but usually it's very symmetrical. So here we are, approximately the same number of days to the right into the future from the head of the formation. And we're at around the right price levels. They are oftentimes at around the same levels for the two shoulders. They can be a little higher, a little lower, depending. This one, because the neckline slants upward, fairly significantly, should be a little bit higher. And this line is not drawn correctly. It's supposed to be off that low right there. And this turning point should be off of this low right here, or yeah, let's leave it across the low last week, right there. So, whoops, fudged a little right there. So I am obviously looking for a head and shoulder top, but it hasn't finished. We're in the last stages. It needs to turn down this week, I would expect, and maybe a little higher than we are right now. We are close to getting overbought. There's a chance it'll get overbought. Watch OJ very closely. Remember, it went parabolic not long ago, and major overbought levels. Incredible. I haven't seen something at 98 on an RSI, well, maybe decades. So there's a head and shoulder top building. Keep an eye on it. Cocoa, bull trend, no sign of it stopping, not overbought anymore. A little divergence. You've got your highest high on a bearish signal that didn't work on June 12th, then new highs after, but still this is a setup for a darn good break. I don't see it starting yet. Next chart is cotton. Again, kind of boring. Huge sideways trading range, 3/4 of a year. Got oversold, bounced off the bottom of the trading range last week, or a week and a half ago. Didn't go up quite as much as I thought it might. It could still go up to 85, 86, 87, but that's about it. Right now, we've got a down day. Long term, it does look like it should break out to the downside. You've got lower highs and lower lows. Great buy signal on the bottom there. Perfect. So sooner or later, I'm going to be calling for a downside breakout, and we'll see what happens. Sugar to sweet. We had a buy signal on Friday. We're long on ER3 below the green dot. We opened a little below the bid, so we got long a little cheaper. Very small loss at the moment. We bought the opening. It was a little loss during the morning, and it looks like it may come back to close higher in the opening where we're long from. But right now, very small loss. And lastly, coffee. Also a buy signal last week. On Thursday, Friday, okay. Today, not quite, a little bit lower. Small loss, inside trading range relative to Friday. Doji doesn't really count for much. I want to see new highs immediately, sooner the better, and closing above the high of the green bar, which would be, let's call it 164 and change, to be a little more convinced that that buy signal is on its way up. ER1 and ER3 are long. And we're back to the E-mini. You guys have a great day. Thank you very much.